All right, what is going on, everyone? Good afternoon. Monday, February 24th, 2025. To be with you here. Rocco did not want to be a part of it. He said, shut down the market. He was like that crying kid meme at the college basketball game. We'll go over some markets, again, some texts from people. You could tell that the fear is at a different level, and we're still only 3% off from new all-time highs in SPY. But obviously, the sentiment has changed. There's lots of talk of tariffs and growth scares, but we've been down this road before. But let's take a look at today. We're going to bring you single stocks edition, but we'll review and open with the SPY, as we did break under 600 today. First off, let me gather the doc here. Like I said, we're going to do single stocks today. There have been some crazy movers, a lot in the AI space. So if you're cracked out on those kinds of stocks, we will be looking at a bunch of them today, and some gainers too, like my boy Jim Cramer says, because he's from Philly, not because the Cramer hacks. People are really rough on him, but he says there's always a bull market somewhere, and that is typically the case. You can find one. Put a ticker in the chat if you want to take a look, because there has been some back and forth. So today, big focus on Palantir and Baba. They were both down 10% a piece. We'll take a look at the charts. A big fall. NASDAQ down to 1.1%, leading the indices lower. SPY was down a little bit less than half that, about 45 bips. And the Dow actually bucked the trend, up very small. And the Russell's in precarious position. The indices are really going each their own way. Russell's at a critical standpoint, right under the 200-day moving average. You typically don't see that, when we're 3% off from all-time highs. But again, Apple looks superb. Stocks like that are holding up the S&P. Microsoft looks scary. Small caps look scary. And a name like AMD has continuously looked scary. But let's get into the market today. So first, we will on the that's me, Rocco list today. He'll probably scratch at the door soon. But let's go into intraday first. So real fast, we'll go to the stocks. We'll get into them. But again, Palantir down 10.5. Baba down 10. Can everyone see that? Yeah. MicroStrategy's down 5. Bitcoin is still just trying to gather itself. It's stuck at 95K. This ceiling over the market obviously does not help crypto. I know Solana's been getting whipped really badly, but I still am a believer. Obviously, I think it's going to take a little bit longer for crypto and Bitcoin specifically to go back to 110K. Probably by we'll see if it's in one of the charts, but probably at least a couple more weeks for that crypto complex to explode. So that's for this part. All right. So we're going to go into more single stocks. So I don't want to focus too much on that. Here's the intraday chart. So a lot of the volume as well was in the morning. We actually had very heavy volume till about 10 a.m., 10:30. The lows came at 10 a.m. Pretty interesting. We opened essentially at the highs at 6:03, and then it was pretty similar to the selling you saw on Friday. Sell, Mortimer, sell. We'll ask questions later. We went from 603 all the way to a bottom of 596. Pretty good panic right there. And then we ended up squeaking our way here around 11 a.m. all the way above VWAP, or volume weighted average price, all the way pretty nicely too, with a rising VWAP. And then, as you can see by this big volume bar here, pretty heavy selling at 3:30. Again, folks really don't want to hold for whatever reason going into tomorrow, and we ended up closing down 45 bips away from VWAP, under 599, even under 598. Again, NVIDIA as well reports earnings this week. Don't really love the setup. I don't like tech and semis for the next 2 weeks. I think it is going to be a little bit of a precarious position, but I do favor small caps and industrials through the Dow. I think they're actually going to have an okay bounce, and you're going to see those moves against each other in terms of the indices. So as I zoom out in terms of SPY, before we get into the crazy stock movers, again, I love the support at 590. I know it looks like we're getting close. I like the support at 590 here for sure. I mean, not for sure. Nothing's for sure except death and taxes. And the Eagles, Super Bowl champions. But the January 13 low here, that takes you to 575. I don't think we'll get that far down, to be honest. I think 590 holds. And to be frank, I thought right around today it got a little bit too close for me. But I thought right around 597 is what I've been writing with other technicians and such. So I thought right around today's levels will hold. The problem is, so as I zoom out, I look here in terms of the accumulation date. You can look at my video from right before the Eagles did become world champs. We were saying that the SPY was going to end at I'll take a look at those tickers. Thanks for the chat. Those tickers in there. We'll be looking at a bunch of AI stocks too, so you might see where I'm going with that going into it, Tony. Thanks. But really fast, what I was going to say was, yeah. So what I said 2 weeks ago was the accumulation date for SPY ends on or around the 25th of February. That is tomorrow. It is obviously, it seems very possible and even likely that we pulled it forward a bit and we reached 613. I've been saying it's going to take an immense amount of effort to close above 610 in SPY. I also said that in the same video, and I said I want to know if we do it and how we do it and for how long. It didn't really. It did it the day of the high, and it did basically 3 days total. It did the day before the high, the day after, and then it crapped out, and here we are under 600. So we probably heard me say this before, but this market has to correct in terms of duration instead of, in my opinion, strictly price. I think a lot has already come off. As we said, we went from 613 to 597 in 5 days. So again, trees don't grow to the sky, but they also don't just collapse either. Beautiful rising 200-day moving average. Overall is largely holding 45 RSI, getting a little bit cute there, but recent weakness, of course. Volumes picked up. Like I said, I don't like the market for the next 2 weeks or so. I think we'll be in distribution till about right around March 5th or so. And that'll take you to about, I still think we hover around 605. And I've told you about our levels in terms of risk reward. I think here is a low. Next level of support takes you down to 590. And then after that, 575. And in terms of risk reward higher, I still think we bounce around and we hold around that 605 level. We don't get too far away from it. And then later on, end of March, hopefully we can try and get back to the new all-time highs, which we just did 5 days ago. Can't throw the towel in this market. The word's been resilient all year. All right, let's get into some of these crazy stock movers. Some of them have, hold your breath because they are wackadoo, as we say. I don't know who says that, but let's take a look. So we'll go with the first ones, the up moves today. These have multiple standard deviation up moves. So I gave you a little market recap overview. He will go into some single stocks. Berkshire Hathaway, you saw the Warren Buffett, the great Oracle of Omaha, had his notes this past weekend. Obviously, massive cash hoard. But what else is new when you're a massive company, $1 trillion like his with $500 million revenue yearly? So here's the Berkshire all-time high, beautiful candle. Just to show in a down market, like we said at the open, always a bull market somewhere, up 4% to new all-time highs. What can he say? Personally, I would not. This is the B class, yes. So I personally wouldn't chase this right here. Obviously, it's a nice breakout. They had their weird Saturday earnings. I'd rather buy a pullback at 480 or so, and you're still, in my opinion, having a decent entry. Maybe you get it, like we were talking about, distribution in the market overall for 2 weeks. I don't think any name potentially is safe. This will probably hold on better than the tech space, but again, for an entry, I would target 480. All right, next, Live Nation. They get a lot of my money. I go to a lot of concerts. New 52-week high. Zoom in here on Friday, and today getting very close to it again. Just monster. Look at these periods of overbought. This is a nice wrapper of stock protecting for inflation, and these guys obviously raise prices on tickets, and they're saying in their earnings call. So they're I know this quarter they're actually selling more tickets at a higher price, but last summer they sold less tickets at a higher price. So it's this is different from Hershey's taking away and putting less chocolate in your bag and raising a higher price. This is similar, but obviously on a much higher margin, and they're selling premium things, as I know, as I'm trying to meet Creed in July. Can you take me higher? Anyways, so this has been largely overbought from mid-September. Then it had an ugly period here, I would say, till early of this year, and then really just got its legs underneath it, and they just had a pretty decent earnings report. I've liked this stock for a while. They get so much of my money, so I wouldn't personally invest in it. But the thing is a superstar. A good entry would be around the 21-day exponential moving average, which is 147. 148. I think that would be a good entry for a 155 target. So this is, to me, is a little bit, overreaching. But again, I would give this a week or two, stay on the sidelines. I would pick my spots in the market over the next 2 weeks. I think if it's anything like tech related, and like massive beta correlation, I think you're going to get your chances in the next 2 weeks. If it's more industrials and more small cap, more energy financials, I think they'll hold on better and potentially even go higher. Next one and last one for the up moves today, multiple standard deviation moves, is Dollar General, a big move, up 3%. But if you notice from the other charts, Berkshire, superstar, Live Nation, superstar. And then Dollar General, obviously this could be customer fears and whatnot. This is not a strong name as I zoom out. Really no reason to own this after this May earnings report. Really just it couldn't really hold this 200 moving average. And then this really cemented it. Biggest volume of the year. This Dollar General, kind of died end of August. And here all the way to a new 52-week low in mid-Jan. And here we go all the way to the upper band at 79. Is that new highs? Relatively? No, it'd be 83. That takes you back to November. Let me look at the chart here in terms of, you can always rotate into absolute superstars like Berkshire and Live Nation. Obviously, some folks have to rotate into, losers like this. I think this had a nice run, but I think this is going to end. The 200 moving average up there at 98 looks extremely heavy. I think this is going to at least $74 and potentially. Yeah, so again, 74 is right here where my cursor is, and then potentially even, closer to 70 or $70. So don't love getting this one right here. All right, next one. These, I'm sure you've seen Palantir down 11% today. It continues. So this is one of those stocks. I think it was the actual best stock of 2024. It was one of my favorite picks. I've told many people. About Palantir. So this thing still has amazing flows. This thing's been a rocket ship, truly, since June. It's really July, I'd say, when it had this first experience these overbought conditions, and they had a strong earnings report here, actually on the Yen-mageddon, and then here in September, really, once it got this 200 moving average and started to get this slope, really extraordinary. This thing's going from 34. 34 in September, when we're having hot dogs on Labor Day, if hot dogs are your kind of thing, all the way to 125 5 days ago. So everyone just calmed themselves. I know there's a lot of funny memes, now these bars are basically saying, what does this company do? And obviously, Trump cutting potentially, defense budgets and such. Here's the thing about Palantir chart. I was talking with someone about this as well. I don't like it here. The bar is still ugly. It looks similar to this one. Again, the stock has a $6.50 average true range, so this thing can move. The range today was, 101 to 89, so still outperforming that. Closing right near the lows. I think this actually goes all the way to about as low as $81 in the next 1 to 2 weeks. It's in that fold of what we just said about tech, kind of mega beta. I don't like it here. If and when it does drop to that $81 level, which essentially I have on a different screen, a different Bollinger Band here. And 81 is as well. I do like it because it is filling the gap from that February earnings. And I've seen this in many charts recently, and it's still above these December and January highs. So I think it happens. You have to be patient. And then I still think this can be an absolute superstar with a 120 target closer to the end of March. So if you get an 80 to 120 in stock, you can imagine how much you do in in debit spreads. Really no reason with the volatility the way it is in the stock, but I think you have a chance. And again, 81 is not a crazy tell. The 200-day moving average is all the way back here at 48. So this thing's just absolutely gone bonkers. And again, just one thing I recognize in terms of RSI, this is kind of the the weakest it's traded in its range since January 7th, and then it went a little bit lower here below its 50, which would equate to $87, and then it rebounded. Then it had a similar, but not as drastic, a collapse or sell-off, I'll say, November 4th before the election. So just, a little weakness here. It's, Shea Gilgeous-Alexander, having a 10-point night because the defense kind of figured him out. I don't think it's, you sell them and you look for trade offers like they are with my man Embiid, who is now worthless and I think definitely has worse knees than me. Okay. So that was Palantir. Next, so I gave a full wrap up on that one. All right, Baba. These Asian stocks have been absolutely on fire. Similar chart in a way, but not as slopey. You could see the increase, not as sharp. This one, again, you had a little bit of an oopsie here. Baba gave you a chance. by mid-January to get in, and then to skyrocket 84 to 145, and then now an ugly, ugly bar down 10%. Now what? We've been talking about Asian stocks. You got to be in it, honestly. They're giving you the benefit of the doubt. This is obviously still in nosebleed territory. I would hopefully, and this candle is telling me that it looks likely, I would give this a little bit more time to come in. I would like to own this around 113. I think if you can get that in there at 113, I think that's a good, that's a 21-day exponential moving average. I think that's a good risk reward. It also coincides with some of those September highs. And it looks like it's going to fill some of this gap from the trading here on back to Valentine's Day. So I think that seems like destiny. I don't want to be in this area, like I said, with the whole tech overhang for the next 2 weeks. That is an ugly candle. This looks like it is headed to 113. And then it'll be a good entry with about a 125 target. But this over here is overreaching at 129. I don't want to really chase it here. And then another one for all you French fries folks, a big collapse here. Weston, a new 52-week low. So really giving you a bunch of everything. Berkshire Hathaway, new all-time high. Palantir from highs, and then quick moves. And now look at this, Lamb Holdings, 52-week high. This thing was the belle of the ball last March, and obviously we're almost here next March. This thing was 108 last March, and then ugly earnings. You got to pay attention if it's just one earnings report and it collapses like this, and investors say, "Whoa, we were off." That's one thing. If it does it again here, yikes. And look with the oversold territory that comes with it as well. And then try to rebound. Look with this, and then you can combine that fundamental information with technical analysis. It gets to a declining 200 moving average. Can't do it. And then the earnings confirms it again with a gap down Christmas week. And here today, a new 52-week low. Again, you want to pay attention to the overall motion of the ocean, and that's the black line here going lower. Me, no, likey, don't want to own that. So now what do you do potentially for a tactical trade or anything like that? I'm actually kind of surprised here that 55 gave out. This is kind of a slower mover. This has a $2 average true range. I thought 55 was going to hold where my cursor is. It slumped all the way to 52. I think, like I said, this is not tech or meta, or mega beta here. I think this could pop to 59, 58 in the next 2 to 3 weeks, but I would be super patient. That's if you got, balls of steel and you're going counter trend trading, if you're just looking to go long some weakness. But it's dead cat bounce. I'm calling for a dead cat bounce. That's it. Okay, top 3 gainers of the past 5 days. No repeating charts. These have been some of the high flyers, like luchadors of wrestling, essentially. Celsius up 43% in the past 5 days for an average of 8% or so a day. A lot of it came right off the 52-week lows. Celsius are the those energy drink things. $21 52-week low on the 12th or 12 days ago, and then they bought one of their larger competitors. The stock goes from 21 to 34. And now, pretty big move down, 4%. Now what? Again, you want to pay attention to the overall motion of the ocean. You could see this black line here. This stock died right around my birthday here, essentially, June 11th here. Really, no reason. I mean, I'm looking. I'll be a stickler. 200 days still rising. There's no reason to hold this as of essentially Father's Day, mid-June of last year at $65. No reason. And then the earnings reports confirm that, and you have nothing but redness here, almost like someone, meteorologist calling for thunderstorms. You're seeing, the shades of green over your area, signaling rain, precipitation. Oversold, weakness. Don't want to be in it. Recently on the buy news, it had obviously being overbought, couldn't get near, essentially to the 200 moving average, and decembade. Don't like this stock. I think this moves to 25, which is a massive move from 31. That's 6 points. I'm sure the puts are super uber expensively loaded for a stock that was trading, $96 less than a year ago and now 30. So don't like this one. I think this heads to $25 in the next 2 to 3 weeks. And ultimately, I see $20 or new 52-week lows in sight for this one. Next, but it's had a fire week. Best of the major, traded stocks with volume. Number 2. So really fast. Celsius had that dead cat bounce. I'm kind of looking for Lamb Weston. I basically am forecasting a repeat of that. Woo! Next, Unity Software, Fire, up 27% the last 5 days, or an average of 5% or so a day. Today, bucking the trend, down 3.7. Pretty messy chart. It's been, crap. And then really just recently, around Thanksgiving week here, after a bunch of closes above $21, it's trying to eke away. There's worse charts than this. I mean, I hit a 52-week high 3 days ago. It may not, that when you have a 52-week high, that's not the chart that you typically see, especially with the 200 moving average doing that. But if you really kind of zoom in here, or I should say zoom out, what you're going to essentially see here is this black line is going to have the bad days behind it, essentially start to base here and then start to curl up and go higher, kind of what's similar we're seeing in, with like nat gas. So, I mean, you could do similar things for near-term targets, 1 year 50% Fibonacci, it goes from 34, 17 points, 9. It's a little, 26 is not crazy, so it's already 27. This may have a little bit more of a bullishness ahead of it. I don't think so, though. This is in the software sector. I think this trades to $23. I think it gives back a bunch of its gains to right around this 23.75 level, which was really a level to contend with throughout January. So I think it heads towards 23 half in the next 2 to 3 weeks, which a monster move from 27 here. All right, and last one for the top gainers, but it's had a fire week. Next one I'll cover, last one for the up ones, is Novo Nordisk. So this one's also giving it to you all here. So this one had highs last June at 148. Looked decent here. This one was a bit tougher due to the volatility of its rise. So the 200 moving average was continuing to rise, even in the face of this lackluster earnings report, and finally started to roll over here in November. And then coupled with this oversold nature continuously, no reason to hold this. This just put in a 52-week low on Valentine's Day. Can't get no love. Love hurts. MVP. $78, and now it's bumped all the way to 91. Again, you're seeing this rotation into some of these, especially in the stock world, of weak names for short-term bounces. And then let's see what happens next. This, I think, almost the opposite of what I said in the market, that this is going to appreciate in terms of time. I think this will hold $84, which is right here where my cursor is. And then it'll hang around here to the upside around 91, potentially $92. And I think that'll be it for Novo Nordisk. All righty. Top 3 loser the past 5 days. And I know this is what a lot of people are focusing on. Drum roll. It's Rocco barking upstairs. I guess that's his version. Okay, low. Usually try to mix up the correlations. A lot of these are cracked out, and they obviously are in the same space. It was hard to avoid. And just due to the dramatic nature of the charts, I said, what the hey, let's go into them. So, okay, low. If you're not familiar, this is a commercial scale energy electric utility. They do fission power plants. No revenue, but a $5 billion market cap. Stock has gone from, essentially $9, where it was in mid-October, all the way to $59. And as we know, trees don't grow to the, talking to myself, so no one's going to say sky back. But so overall, beautiful 200-day moving average. This thing really got its legs underneath it mid-October. I think this is approaching very close to an oversold buy. No, it's not technically oversold. It's hung in right around these levels. It is a little bit weaker now than it's been since September, where it was under the 200-day moving average. So there are warning signs, but I do like this support here at around this. This is volatile, obviously. This has a $5 average true range for a $34 stock. It's down 12% today with an ugly, ugly looking candle. This essentially has not had any bidders from $57 straight down to $33 in the course of 10 days. So, grab your balls with this one as a risk management skill. And this one, if you can get in at $30, I do think you have a very solid risk reward. Again, be careful. This has crazy volatility. The 21-day exponential moving average is $44. So you're $10 below that. So this one is extremely on sale. I think it bottoms this week, potentially as low as around 30, where it would set up for a nice pickup. Palantir, we already had, so I'm not going to highlight that one, but Palantir down 24% this week, or an average of 5% a day. And the last one we'll go for before we wrap up is Tempus. This is an AI name as well. This whole group has really been taken out back. For you folks that don't know this one, this is a life sciences healthcare tech company. They do have some revenue, $10 billion valuation. I believe these guys are reporting earnings as we speak. Yeah, they're down 13%. So breaking to that to you live here. This one's had an awful week, down 20%. It looks like the pain, from what I can tell here, is continuing after hours with their earnings report. Looks like they lost 15 cents. Don't know what the estimate was. Or no, the estimate was 15 cents. It looks like they came in a bit worse. And yeah, I don't like this one. So it's trading $60 after hours. We had closed at 69. Yeah, this one can go as low as $47. And obviously with the earnings volatility happening right now in the call, obviously this can move just a crazy. This was $91 10 days ago. So these things have gone in straight line down 10 days. Some of the charts are surprising how weak they've been. Tesla, Coinbase, even Bitcoin. Pick your spots. Like I said, this one will probably base, I don't know, potentially as low as 47. Curious to see where the after hours is. Okay, so top 3 absolute trades of the past 5 days. If you were long Celsius, short OK low, and long Unity, congrats. That's like a 10 player parlay. Your positions were up a median 35% in the past 5 days. You are crushing it. All right. We will talk to you either tomorrow or the day after. Oh, can you look at, sorry, buddy. I did not want to sign off. Can you look at Oracle and AI? Did not want to forget about you, Johnny. Make you wait 26 minutes and then do that. No. All right. So Oracle, I was long this one recently as well. This one could be a frustrating one. This one peaked back here on earnings December 9th at $198. So this is, I'm going to wrap up basically what I said earlier. Don't like this stock for what I was saying with the tech overhang. This is in the software group, obviously. These guys report March 7th as well. I think this is going to be in distribution mode for the next 2 weeks or so to about 155. 155, I think this actually has a very pretty decent risk of getting to its 200-day moving average, actually tagging it in weakness. But that would be your support. After that, I don't think it gets much worse than that. But I think you potentially have an entry here around this 156 level in about 2 weeks. I see more weakness ahead for Oracle. And then the last one, AI, my man, Allen Iverson, a 6-foot guard. Okay, so this is C3 AI. Obviously another AI play. Just guessing from what we said, this week was not special, was not wonderful for it, and that is the truth. From 34 to 27, essentially in a week. This thing peaked in December as well, similar to what we were said for Oracle at $45. Now all the way, almost cut in half to 27. So this is an interesting character change. The 200 moving average, where it served as its support since November 18th, after recording overbought conditions, now it's trading underneath it for only the second time in a row here. That 200 moving average is 28. We'll round it out even, call it 29 even. Today, an ugly candle down 5.7%. Don't love the space it's in, given the narrative that we just, weaved and seen the charts for the next, 2 weeks or so. But this has had quite a decline, and it's to a decent, important support level. I think you are, kind of safe getting in around or under $28. I think it'll snap back and get above to this 200-day moving average pretty soon. So I don't know what your target was or what your entry, or what you're thinking in terms of duration or holding target. But this looks a little bit overdone to me. Obviously, it doesn't look super healthy, but I want to give this the benefit of the doubt. And I think this $29 holds. I think this is getting baby thrown out with the bathwater, and it's really not in a great space. But it's had some ugliness. They do have some revenue to their names, and this is just in the AI space. I think it'll be fine. And you have minimal, not minimal, but you have some lesser risk here if you enter here. That was a mouthful. All right, peace out.